investors holding on to an idle asset like gold when they could put their cash into something more productive, like investments in companies, people, or bonds? And how does that affect society? In some cultures where historically there's been a lack of trustworthy institutions to manage one's wealth, not investing in gold is often considered the larger risk. This has fueled a lingering love of the metal.
People have used it instead of cash. So basically what they've tended to do is gold is part of their savings, and it's, if you've saved up pound notes, you're probably going to go and spend them, but if you've got gold, you're only going to liquidize that when you really urgently need to.
It's not so much the actual monetary value that it represents, it's more of what it means to give someone gold. It's like, this is my most precious thing that I have, and I
Poses risks to the financial system itself. For sociologist Nigel Dodd, gold's financial attraction is actually a bit of a mystery. He thinks it's a poor form of money precisely because of its antisocial properties and propensity to encourage selfishness. Gold, he says, undermines the fundamental point of what money should be, a reflection of a society's capacity to share.
One of my favourite social thinkers about money was a guy called George Simmel, and he talked about how there's a kind of paradox with money, that it's a measure of everything and yet it's never still, it's always moving, it's never constant. Society wants to anchor itself to gold partly because it's difficult to cope with money's relativity. There is no still centre to money if you understand it properly.
It's a counterintuitive argument which even the greatest minds in history have struggled to communicate. Take Isaac Newton, the physicist and alchemist. As Warden of the Royal Mint at the Tower of London, he oversaw Britain's first flirtation with a gold standard. But the move inadvertently overvalued gold in Britain, leading to a financially destabilizing run on the nation's silver reserves. Newton knew this would happen, but he couldn't convince the established elite that devaluing gold would be the better option.
I can calculate the motion of heavenly bodies, but not the madness of people.
But for Nigel Dodd, there's another issue. Gold also expresses a wastage of human potential.
On the one side, gold clearly appeals to people as a way of displaying the fact that they've got more than they need. So there are very famous descriptions of gold as a form of superfluous wealth. So we love to gold plate our phones, our toilets. It's a great display jewel. You know, gold looks spectacular when you coat things in it. But there's also a really interesting psychoanalytic literature on gold, which suggests that actually gold is a form of sublimation, and that what gold really is human waste, to put it nicely, and that there's this connection between people that are very attached to their money, very attached to their wealth, and people that don't like to get rid of their own waste. So gold is effectively poo that's made to shine, is probably the politest way of putting it. And so in that sense, you know, if you're in love with gold, you're in love with your own poo.
We prefer to trust in the tangible reality of a physical element over the more ethereal concept of my word is my bond, which depends on a trust in other people. The physicality in any case seems to be the differentiator. Gold is present in the here and now. It can be protected, controlled. And that's what makes it a safe haven and an anchor. But herein also lies the problem with using gold as a financial benchmark. Money isn't useful unless it's constantly flowing and lubricating social activity. Gold's physicality also makes it too easy to hoard.
If all gold was radioactive, then people wouldn't stockpile it anymore. It might become a bit more social, actually. It reminds me of the old theory of Gazelle about demurrage, the idea that we need money to deteriorate more in order for it to work better.
For Gazelle, the anarchist economist from Germany, the most important quality of money was its role as a medium of exchange. Money had to flow freely through the economic system if it was to be socially useful. Stagnation or hoarding of money, be it in gold or paper form, was economically damaging on the other hand. That ties in with the opinions of Adam Smith, the father of political economy. He used the analogy of a highway to explain gold's monetary role, arguing it's only when gold is deployed by the financial system that it can be transformed from dead stock into productive stock.
But I prefer to use the metaphor of a river or a stream, which has no value to anyone unless it's in constant flow. Because just like with gold, it's only those who understand that its true value lies in being a conduit for change, and not a stagnant, unutilized pool, who can best reap the rewards of deploying banks to guide that force to where it's needed most. In short, gold is most valuable to society when it becomes a currency.
The story of gold, then, is one of society's desire to cling to something permanent, to convince ourselves, perhaps, that things just won't change for the worse. The paradox is, those who hoard gold also send the signal that it pays to be selfish. And that, inadvertently, destabilizes society and the social networks which create our wealth in the first place. If everyone was to do that, who knows, there might not be much prosperity left for any of us. Isabella Kaminska, Financial Times, London.
Gold manipulation from March 2006 to August 2012. And those two lines in the orangey color shows you when they actually manipulated gold down in the interest.
If it had been money for 6,000 years, somebody reversed that and eliminated that economic law.
Well, it's an asset. I mean, it's the same. Would you say Treasury bills are money? I don't think they're money either, but they're a financial asset.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money. I yield back. My time is up.
So, if gold is not money, then it's obviously a very good asset, because here in this chart it shows you at different periods in American history how the gold, or how actually the dollar was devalued against gold.
Do you think gold is money?
No.
It's not money.
Even if it had been
money for 6,000 years, somebody reversed that and eliminated that economic law.
Well, it's an asset.
All right, there you have the exchange that caught everybody's attention today. We are glad and honored to welcome back Congressman Ron Paul from Texas, who also is running for the presidency. Congressman Paul, gold is not money. What was Bernanke driving at, eliminating history?
I'm not exactly sure, because I think he has to protect the dollar, and he has to define the dollar, because the dollar has to be a monopoly. You know, if you're in the private sector today and you try to enforce the Constitution and use gold and silver as legal tender, even if you use silver dollars, US dollars, they will come down pretty hard on you. You can end up in prison if you do that. So for paper money to work, you have to have real strong legal tender laws, and you have to use the force of government, because they can't stand the competition. Of course, I'd like to change that by permitting competition and allow us to compete in the marketplace, and let us use something other than Federal Reserve notes if we so choose.
Let me ask you about those options. You are the head of the Oversight Subcommittee for Monetary Policy. Are you going to submit legislation? Are you going to hold hearings on any of this?
Oh, yes, we have a bill already in on competing currencies, and we have had some preliminary hearings, but we will have more on the competing currency issue, because I predict and anticipate this next year is going to be hectic. I think we're just beginning to see the results of what QE2 and QE1 has done. So I expect that we're going to have a lot of people unhappy with higher prices. You know, today I cited the private sources, and they claim that prices are going up over 9%. 10%. I don't know if you watched that or not, but I happen to believe that consumer prices are actually going up much more so than the government states.
Well, let me ask you, gold prices are soaring in the marketplace, and many people think they're soaring because of the expectation that the Fed might ease some more with quantitative easing 3. I don't know what they're going to call it. They may jam another $600 billion in. Who knows, Mr. Paul? I sure don't know. But can you challenge him in a hearing? Can you put him in front of you and maybe surround yourself with colleagues from both sides of the aisle and ask him what he's doing to the value of our money?
Actually, I'm not permitted to do that under the House rules. I'm a subcommittee, and they have sort of standing rules that a subcommittee does not qualify to have the Secretary of the Treasury or the Federal Reserve Board chairman before that committee, because I've checked into that, and I would not have subpoena powers to insist that he come.
What about the Fed audit rule? Now, I believe you signed on to a Fed audit. Where does that stand? Is there a way to put some heat on Bernanke through that vehicle?
Yeah, and I think we've achieved something there. We've had some court cases that have been won. That we did not get our bill passed last year, although we passed it in the House. We had every Republican support a true audit of the Federal Reserve. That bill has been reintroduced, but we don't have as many signatures right now as we did before. But out of that, they did concede minor audits, and we're supposed to get some more information very soon from that audit. So with the court cases and that minor audit, we are learning a lot more about the Fed. We did find out that at least a third of the Federal Reserve activity during the crisis went to foreign banks. So I think that's rather interesting. They weren't worrying about, our mortgage holders here or our people who lost their jobs and their homes, but they did worry about foreign banks.
Just one last one, Congressman, quickly, if you would. There's a big movement to relink the dollar to gold, a la Bretton Woods, which was not so long ago. It ended 1971. The dollar was literally redeemable into gold at a fixed price. It was about $35 an ounce. Why not go back there as a way of putting the clamp on the Fed and restoring the dollar's value to gold?
Well, it would be better than what we have today, and that's what you need is a clamp on the Fed so they can't print. There are some limits. But going back only to Bretton Woods, I would suggest we go back and read Henry Hazlitt, who looked at that in 1945, and he predicted what would happen. He said that it wouldn't work, and he was right, and by 1971 it did break down. And I think you have to have something better than pieces of paper that the Federal Reserve prints at will.
Congressman Ron Paul, we thank you very much. Good luck on your endeavors, sir.
Thank you.
This is a chart of the gold rand price, and just showing you from 1989. Yeah, that's the price of the gold going all the way through to 2016. Here it shows you, especially in the 90s, it didn't go up too much, but if you saw a smaller chart, it was still going up high. But from the late 1990s, around here, okay, then it started going through the roof, and since after 2014 onwards, it's going totally through the roof. And that just shows you how much the government is printing money, and as they print more money, it will devalue, the rand will devalue against the gold price. It's actually not the gold price going up, but actually the rand devaluing, so therefore the gold price has to move up to show the devaluation. And this is it here. We've just been recently on all-time highs on gold, and I still believe it's going to go further up over time because everybody's printing a lot of money.
I'm going to turn to the audience for questions in 1 minute. Before I do, though, I just want to ask, though, one of the really interesting chapters in your book is about gold. And there's been a lot of media debate in the past about your views on gold. You yourself have posed the question as to why would anyone want to buy this barbarous relic. I don't know whether John Paulson is in the audience, but it's an interesting question. But do you think that gold is currently a good investment given what you're saying about the potential for turmoil?
Yes.
Do you put...
Economists are usually perfect in equivocating. In this case, I didn't equivocate. Look, remember what we're looking at. Gold is a currency. It is still, by all evidences, the premier currency where no fiat currency, including the dollar, can match it. Intrinsic currencies like gold and silver, for example, are acceptable without a third-party guarantee. And, for example, at the end of World War II, or just at the end of it, Germany could not import goods without payment in gold. The person who shipped the goods in would accept the gold and didn't care if there's any credit standard associated with it. That is a very rare phenomenon. Before you read my book, go read Ben's book. The reason is you'll find it fascinating on exactly this issue, because here you had the ultimate test at the Mount Washington Hotel in 1944 of the real intellectual debate between those who wanted an international fiat currency, which was embodied in John Maynard Keynes' construct of a bancor, and he was there in 1944, holding forth with all of his prestige, but couldn't counter the fact that the United States dollar was convertible into gold, and that was the major draw. Everyone wanted America's gold.
So now finally you have a central banker obviously now admitting that true money and honest money is the gold and nothing else, basically gold, silver, and I would even say platinum. But now, because he's not the Federal Reserve Chairman anymore, now he can actually tell the truth.
So then, why do we need a central bank?
Well, the question is a very interesting one. We have at this particular stage a fiat money, which is essentially money printed by a government, and it's usually the central bank which is authorized to do so. Some mechanism has got to be in place that restricts the amount of money which is produced, either a gold standard or currency board or something of that nature, because unless you do that, all of history suggests that inflation will take hold with very deleterious effects on economic activity.
Now, you were a great admirer, in fact, an accolade of Ayn Rand, the great philosopher, who believed that in the absolute most limited role that the government could play in people's lives. She probably wouldn't have been a fan of the Federal Reserve Board, would she?
Well, I don't know, because we never discussed that in particular. But I think she recognized that there are lots of institutions which we would be better without, but nonetheless probably require them if indeed society as a whole decides to do that. Remember, we live in a democratic society, and that compromise is the very essence of a democratic society, because if we're all individuals with different ideas and we want to live together, we have to do that. And there are numbers of us, myself included, who strongly believe that we did very well in the 1870 to 1914 period with an international gold standard.
So where are you going to invest? Are you going to invest on what the one economist calls it poo, or are you going to be invested in gold? I know where I'm going to be invested in 2016, and most likely for the next 3 or 4 years. Where it's going to be, there's only one asset class, basically precious metals, which is gold, silver and platinum. Okay, I hope you enjoyed this video, and subscribe to investingmatters.co.za.